Hello, everybody. We're at about 9 o'clock right now. We have a lot of busy professionals in the audience today, so I think let's start taking our seats. We'll try and keep things running smoothly and on time. So once everyone kind of gets seated down a little bit, I'm going to get things rolling in the next few seconds here. Hey, Culver, how are you? All right, good stuff. I think we got people sitting in here. We got a nice full capacity day, a little bit extra than what we thought, but that's great. There's always room for more of our mining community to come and talk about innovation. So let me talk a bit about innovation. The idea behind the show here was that this word innovation, such a great word, so important to our industry. But I think we all know that words, when they get bandied about too much, start to lose a bit of their meaning. And there's been a lot of hot air, it seems, in the last couple of years. It's become a buzzword, and buzzwords seem to lack the initial traction that made them important in the first place. So the idea was, let's put together a day that really puts meaning back in the word. And that meant taking the hot air out by bringing in the key decision makers in our industry that are actually really doing something on the innovation front. With the hope that you, the audience, and this is being live streamed as well and broadcast through the Northern Miner website and mining.com's website, so we have thousands of eyeballs out there watching us as well, with the hope that all of our audience can take a couple of ideas away to make their businesses more efficient, more profitable, more innovative. So we thank all of our all-star lineup of speakers. In the theme of innovation, we didn't want to bring you just a traditional panel discussion where the moderator asks a question and goes down the line and things kind of go by rote. So we brought the round table in. The round table, we think, is a nice proxy for boardroom meetings and all those good discussions that happen in corporate head offices where big ideas get done. It's a little more free-flowing. There's still going to be a moderator, but we're hoping to really get our participants talking and diving into the issues. And we want you, the audience, to really be a part of this as well. And to do that, we've done something here. Our marketing specialist, Mladen Kovacevic, one of the all-stars of the Northern Miner Group, has set up something called Slido. Mladen, can I get the Slido? Okay, so here's what happens. Everyone here, we have Wi-Fi for everybody. If you just go to the Carlu, you'll see a page come up for the Carlu, and it's Miners, all lowercase. M-I-N-E-R-S is your username. That's all you need. Just type in Miners. Then you're plugged in. You have your Wi-Fi. And then if you would just go to slido.com, S-L-I-D-O.com. You have the code there, hashtag PMF17. And what Slido is going to do here, I'm telling you why to log in, and why would I even ever log into this? You're going to log into this so that you can engage with our roundtables in a little bit of a different way. You're going to be able to, we're going to put up poll questions at the beginning of the roundtable to kind of gauge, take the temperature of the audience and what they're feeling about some of the key issues that we're talking about on the roundtables. And you're going to be able to ask questions as well of our participants, which will come up on the monitor. And our moderators will be, in this case, the all-knowing controller of the event. Will decide whether or not there's time to get to the question, but I'm sure they will. So go up to Slido, get some questions going, respond to our polls, and let's really make you, the audience, a part of the day. That's going to be key. Yeah, what else can I tell you? The Northern Miner itself, at the end of the day, we're going to have a great lunch. Anyone that's been to the Carlu, which I'm sure most of you have, the food here is fantastic. We have a nice lunch for everyone, and then at about 5 o'clock, we're going to have a nice cocktail reception. Before that, though, we're going to have a toast to the PDAC, but I'll get to that in a second. We're also going to show you what the Northern Miner Group is doing on innovation, because we're going to launch a beta version of a premium online product that's going to give you more data analytic tools to couple with our unsurpassed news coverage and journalistic integrity for the mining industry. So we're very excited about that. I'll take everyone for a quick little test drive on that at about 4:30 today. So let me circle back to the PDAC. Very early on, I came to Andrew Cheadle and talked about this idea about innovation, and Andrew, being a very progressive individual himself, loved it right away. And we saw that, we knew obviously there was a PDAC's 85th anniversary, and what better time to not only celebrate the past, but to look forward. And the PDAC is the most important mining association in the world because of its ability to see what's coming down the pipeline and to take on important issues that run the full gamut of what it is to become a successful exploration company. So with that, I'd like to pass it over to Andrew to say a couple of words and officially launch the PDAC's spectacular 85th magazine, which everyone has on their seat there. Andrew, please come on up.
Well, thank you very much, Anthony. And Anthony and I have a habit of meeting at PG O'Brien's, which is perhaps not that innovative, but we come up with these ideas and the London forums and so on. And thank you very much for your participation. Anthony, thank you very much also on behalf of the PDAC, over 8,000 members. This is spectacular. I really have enjoyed working with your team and our team and putting this together. We hope it's fresh. We hope that you enjoy reading it. We certainly plan on being around for another 85 plus years, and it's good to see a number of past presidents here. John Baird, thank you very much for being here. But just before we start, I have to say a quick little anecdote. I'm feeling a little sheepish because very recently I had to tell my son, because we don't allow telephones and computers at the dining room table, and I could see that he was on his phone at the dining room table. I go, well, Daniel, please, no telephones, no texting at the table. And he's like, Dad, I haven't. And I go, it's reflecting in your glasses, Daniel. And I guess I'm going to have to put that behind, get with the program, be a little more innovative, and communicate with Slido today, and I look forward to that. So with that, Anthony, back to you, and let's have a wonderful day. Progressive Mining Forum, here we go.
Thank you very much. Thank you, Andrew. And the second meeting I had after I talked to Andrew about the idea was with Tony Moreau from IAMGOLD. And I set that up because IAMGOLD has been doing a lot on pushing the needle on innovation and making innovative ideas real and having implications for their bottom line. Tony got excited about it, which is always when you're coming up with a new idea and you have an industry insider get as excited about something as you do, that's a good sign that we're onto something. Tony quickly arranged for me to get together with Steve, and Steve Letwin, CEO of IAMGOLD, got behind the idea as well. And what better person to kick off the day than Steve Letwin? Steve Letwin, you know, one of the things that's going to come up in innovation is cross-pollination from other industries and what we can learn from other industries. Steve is a walking, talking example. He held leadership roles for Enbridge, for TransCanada Pipeline before that, came over to IAMGOLD in 2010 as the CEO, has ushered in a lot of really important deals. I think everyone here knows about the Cote deal with Sumitomo done earlier this year. And if anyone, we all watch stock prices. IAMGOLD's up almost 70% since January from the beginning of the year. So clearly the leadership and the embracing of change and innovation that Steve has helped usher in is paying off for IAMGOLD. So I won't babble anymore. Let me turn it over to the pro. Steve, would you like to come up and give us a little talk, please?
Well, I always get worried when they call me a pro. I've got 20 minutes, and so what I wanted to do is take you through a little bit of my history and hopefully share a little bit of my experiences, particularly as they tie into innovation. Excuse me. So I'm 62 years old. I was born in southern Ontario, raised on a farm, went to school here in Ontario. I spent the first couple of years with Procter & Gamble here in Toronto, and then at the tender age of 26, I got headhunted to Calgary, Alberta, and I went to work for a fellow that 95% of you won't know, maybe some of you do or remember. He was sort of the Elon Musk of the oil days. His name was Jack Gallagher. So at 26, I went to work for Jack Gallagher, who was building at that time Canada, and in fact, North America's largest oil and gas business. And unfortunately, Jack lost his job, lost his company within 3 years of me getting there. Not that I was tied to that, hopefully. But Jack made the mistake that many of us tend to make and continue to make around debt and innovation. And I'm going to tie those two things together a little bit. So Jack went out when oil was around $25 and started acquiring properties and started to invest in what I call long cycle rates of return, big projects. He was in the Beaufort. He acquired Hudson's Bay Oil and Gas. And because he had fallen in love with his own equity, he did it with debt. Sound familiar? And keep in mind, Jack was a superhuman being. If he was here today, we'd all love the guy. Very charismatic, very smart, but he makes the mistake and made the mistake that many of us do, and I made this mistake, so I'm going to refer back to it, of falling in love with your own equity and not keeping an eye on what's going on in innovation. So as Jack piled into long cycle rates of return projects, people started to change drilling programs in Western Canada, go for shallower wells, get shorter cycle economics, and when oil prices fell from $25 to $9 and interest rates went from 5% to 21%, that company died. And along with it, the dream that Jack had for Canada's oil and gas exploration program at the time. The lesson there is you can never forget about basic economics. You can never forget about your cost structure. And you can never, ever forget about what innovation and the change in technology can do to your business. It is happening today. It happened 100 years ago. It's going to continue every day, every month, every year, forever. And as human beings, it's easy to forget that because you get on a roll. You get convinced by the marketplace, by your share price, that this will never change. I'm telling you because I went through it, and I'll come back to that in a minute. So that was my first experience at 26 years of age, and I have not forgotten that. I've never forgotten Jack sitting in the boardroom crying uncontrollably at the age of 65 because he lost his company. I went from there into the upstream oil and gas business in Calgary, and I watched something very interesting. In the mid-'80s to mid-'90s, the belief was there would be never another pipeline built in Canada, another oil pipeline. There was too much oil. Oil was trading around $10, and this would never happen again. And what happened at that point in time is that companies like Enron, people remember Enron? When people started a new model. And this model was, we trade electricity, we trade oil and gas, we do everything online. We're the smartest guys in the world, and even though we're running our debt up, and even though we're trading at 100 times multiple, that's okay. Enron lasted for almost 10 years. And when I was living in Houston, Texas, working for TransCanada, I got to know the CEO of Enron and the chairman. Hell of a nice guy. Same experience. Selling something that was not sustainable, selling something that didn't have any hard assets behind it, and ran debt up unbelievably until he had a liquidity problem in 2001, and 30,000 people lost their jobs. One of the major chartered financial institutions, Arthur Andersen, went under. Sound familiar? Again, too much emphasis on debt, too much emphasis on something that wasn't backed up by hard assets. So when I look between Dome and Enron, I look at common things. Balance sheet, the fact that Dome forgot about the fact a little guy could come in and disrupt what they were doing on long cycle. Enron, that went the other way, put everything into something which what I would call was fairly non-transparent, magical, and something the market wanted to grab a hold of because they were sick and tired of hearing about oil and gas and pipelines. So as I moved through my career and I looked at these things, one would think that when I joined the gold business in 2010, I'd gone to Harvard, I had had all these experiences, that I would know exactly what I was doing. Clearly, I did not. Because when I got into the gold business in 2010, what was happening? Gold was going from $800 to $2,000. The industry itself had gone completely into long cycle. Big mines, remote places, high cost structure. What did Steve Letwin do? He should have at that time said, wow, our cost structure is too high. We're completely betting on long cycle. We're not doing anything in innovation. We should be improving our metrics and changing the model right now. I didn't do any of that. I came to Toronto. The stock price went from $3 to $23.50, and I felt like Mick Jagger. Going to restaurants, hey, right? Go to market, to analyst meetings, and they would say, they wouldn't ask one question about our cost structure. It was all about ounces, 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 ounces. Tell me how many ounces you're going to add. Not one question about your technology, not one question about where you were drilling, not one question about where you're taking the company, long cycle, short cycle. It was all around how many ounces are you going to be able to deliver. The ghost of Jack Gallagher should have been in the room with me saying, Steve, it's time you change, because what these guys are driving you to is exactly what they drove me to. Failure. And that's exactly where I was headed. And a year and a half later, when gold turned in 2012 and dropped from $1,960 to $1,057 in 18 months, we lost $800 million a year in cash flow. Horrifying experience. And we almost, or could have, lost the company. A couple of things saved us. I woke up, slapped myself across the face and said, what the hell are you doing? We sold some assets, we kept the balance sheet strong, we reduced our debt, and brought people like Tony here, 33-year-old guy with lots of good ideas around innovation technology into the company. We changed the whole company from being focused on long cycle to a short cycle balance, which brought cash flow in sooner, brought our cost structure down, and at the same time improved our balance sheet. Surprise, surprise, the stock, which had fallen to $1.50, and you had analysts and you had people who had purchased the stock. I would go to the Denver Gold Show, and people who had purchased IAMGOLD shares would walk by and look at the ground. Not me, look at the ground. They don't want to look at me. Loser. You lost money. The worst thing you can do in life is lose somebody's money. They are unforgiving. Unforgiving. Remember that. So we changed. The stock now is sitting 750-ish Canadian. It's up 600% since then. It's up 70%, 60% this year. Let's not forget the lessons that we learned. Short cycle balance with long cycle balance, not too much debt. Do not bet the farm on long cycle, and always look at innovative ways to change your cost structure. Always. Every day, every morning when you get up, think about it. And for that reason, I would tell you that I think the gold business has a great future. Because like the oil business in the 90s, when all investment stopped, nobody thought oil was going anywhere. It was at $9 a barrel. Nobody was willing to make a bet. And because of that, we got short of oil. We had a situation where not enough exploration was done. The gold business, the metals business is in the same situation today. And as sure as I'm sitting here, you're going to see a response in price because of the lack of exploration that's been done in this mining field. I was down in Mexico City. I had 23 guys sitting in a room at the St. Regis Hotel, sons of multi-billionaires in Mexico. Collectively, these 40-year-olds were worth $245 billion. Not one of them owns a gold stock. That should sound depressing. It actually wasn't. I thought, here's an indication of where people are putting their money. Tesla, cryptocurrencies, everything related to technology that's exciting. I think you're going to see a turn. And we need to be ready for the turn. Let's continue to innovate. Let's continue to bring our cost structure down, whether that's ore sorting technology, X-ray technology, thinking about short cycle versus long cycle. Let's keep doing what we're doing, and when this turns, and it will turn, we will get the benefits of that. And then when it does turn, let's not be crazy again. Let's keep the discipline. There are companies that have done that. There are very few, but they are out there. How much do you think gold is up since 2002? 360%. Gold has moved on average 11% every year for 16 years. How many companies have actually seen their market cap improve? Out of 200, 5. Do you think there's a confidence issue? Yes, and it's around cost structure and innovation. I'm so glad we're doing this conference. It's a reminder that innovation is absolutely critical to efficiency, staying ahead of the game, and making sure, most importantly, that your shareholders are getting the best value for their money. Because without it, you will not stay ahead of the game. And these cryptocurrencies, which I cannot explain, Tony's tried, and I'm thick here. I have no idea why Bitcoin is at $195 billion. I wish I would have invested. But I've made it a point when I don't understand something not to invest in it. I've seen that. We saw the dot-com, right, in the late 90s. Tony's trying to link things to cryptos now. God bless him. And I hope we can do that if it means something, if it's real. But right now, my concern is cost structure, balance sheet, innovation, bringing costs down so that we last for the long time. So, when 4 out of 10 Canadians are $200 away from not being able to make their next credit card payment, I get a little concerned about debt, and I get a little bit concerned about where we're putting our money. And I would tell you, from the mining space, my perspective, putting money into mining right now, I think is a good bet because we've had such a long, dry spell of exploration. And on that note, ladies and gentlemen, thank you very much for listening to my talk.
And that's why Tony was my second conversation. I had the privilege, Stephen Stewart, I don't know if Stephen's here, with Young Mining Professionals, does a fantastic job arranging intimate dinners for young mining professionals a couple times a year. And Steve was the speaker at one a few months back and gave a powerful kind of, you can really connect and feel the energy and feel the wisdom speech that night. And I was like, okay, this is the guy that we need for this conference. So thank you, Steve, very much for coming out and contributing. Okay, let's get things rolling a little bit. Mladen, can we get our sponsors up there? And Michael, can I get the handheld mic going over here? Okay, is that good? Great. Because this is pretty important stuff right here. I mean, we're having a great day here. We're at the round room. We're going to have great food and great cocktails and all these great industry decision makers here, but none of it's possible without these people. So IBM, Peartree, PwC, Rio Tinto, Major Drilling, McLean, Hatch, Hardline, Canadian Mining Journal, Mining.com, Red Cloud, Klondike Strike, Women Who Rock, and the aforementioned YMP. Thank you all for your support. The sponsorship is key to making this day possible. If we could give a round of applause to our sponsors. Fantastic. Okay, we're going to get things rolling pretty soon. I do want to give a shout out to, we have our star Western reporter, Leslie Stokes, here in the front row. And we have Matt Keevil, our Western editor. They came all the way in from Vancouver, and they have done such an incredible job spearheading the Northern Miner podcast, which was launched a little over a year ago. When it first got going, they had a couple hundred listeners, and we were proud of them. Like, wow, just guys getting that going. You got a few hundred people listening. I think the last stats that came in, they were up to 12,000 listeners in a month. This podcast has exploded because the quality is incredible. If you have not listened to the Northern Miner podcast, do yourself a favor. Tune in. It comes out once a week. It's an hour long. And as anyone, I won't tell you, ask anyone that listens to it. Let them talk about it. I won't say another word about it. But they're going to be doing it in the green room today here live. So that's going to be kind of a fun aspect of the whole day as well. Okay, without further ado, my friend and senior staff writer for the Northern Miner, I know all of you have read her fantastic stories that she's been contributing now for, are we up on what, 8 years? 10 years. 10 years. One of my favorite people, Trish Saywell. I'm going to pass it over to Trish, and you can introduce the first roundtable of the day. You want me to hold your water? Oh, you're going to be up there. That's right. They need a little bit of setup time there. So that's okay. You know what I think it would be a cool thing to do? I don't know. This all depends on the audience. Since we're talking about innovation, what I'd like to do throughout the day, if I get contributors from you guys, is to go into the audience and give people the opportunity to give like a 20, 30-second pitch on their company, if they're doing anything innovative, what's exciting them. So I'm going to throw that out there. Think about that. Let me know. I'm going to be here. I'm around. And what we'll do is kind of in between these discussions, I'll come over to you, get the mic, have a little fun with it, and give us a elevator pitch on what your company's doing that makes it so great. And with that, that should probably have given them just about enough time. There you go.
Disruption, and at a time when innovation is no longer a luxury, it's an imperative. As an industry, we have to change the way we do things, and that starts with innovation, and ultimately the companies that get that are going to be the successful ones. But is the mining sector prepared for change, and what will change look like? We're going to start off this morning with one of the most important issues in our industry, which is corporate social responsibility, CSR. And then we'll switch to a more broader talk about the future of mining in general. So let's get started. I'd like to start with Kulveer Gill on the far left. He is Senior Principal at Clario Partners, a strategic consulting firm. He's also founding Executive Director of the Development Partner Institute, which was set up last year to advance innovative thinking about the role of mining in society. Next, Douglas Morrison is President and CEO of the Center for Excellence in Mining Innovation in Sudbury. Douglas spent 14 years in the deep nickel mines in the Sudbury Basin, then another 16 years as a consultant at Golder Associates, working on strategic mine design, productivity, and safety issues. George Hemingway runs the innovation practice at Stratalis, a growth strategy and innovation consulting firm, and he focuses on helping companies think a little bit differently about the future, basically, especially industries like mining that face a lot of change and uncertainty at the moment. Next, we have Stéphane LeBlanc. He is Rio Tinto's Managing Director of Iron Ore and Titanium. He's based in Montreal. He spent about 27 years with Rio Tinto, doing everything from operations management and health and safety to the environment. Lisa Davis is the CEO of Pear Tree Securities. She's a grad of Osgoode Law School, and her focus at Pear Tree is on structured financing for resource companies. Finally, Andrew Cheadle needs little introduction. He's the president of the PDSC. He started off his career as a mine geologist in South Africa, and over the course of his career has done exploration geology, mine geology, and mining executive positions, and he's built a very strong reputation in the industry as an advocate for responsible minerals industry. So, Kulveer, I'd like to start with you. Given that you've spent much of your career working with companies to overcome their innovation deficits and earn their social license to operate, how do we do better as an industry on CSR? Is sustainable mining an inherent contradiction in terms, and what will or should the next phase of CSR look like?
Sure, thank you. And thank you to everyone for having me here today and putting on this great event and live streaming it so my kids can watch it and ignore me virtually rather than in person. The topic of sustainability and innovation is interlinked, and let me just start with a musing of us. Think those of us that are in mining, working for mining companies, you're retired, you're sitting at your cottage or your boat with your grandkids, and you're staring off, and your grandkids ask you the simple question, so Grandpa, Grandma, what did you do with your life? You worked for a mining company for all those years. What came out of it? What are you most proud of? And if you sit in that moment there and you reflect and you stare at your millennial or post-millennial grandkids and you stare at them and you talk about all the shareholder value that you've created, the stock price was here and ended up here, and you can also point to all the money you made and all the RSUs you got and options you got that allows them to have an incredible lifestyle. That's great, but they're going to say, what else did you do with your life? What was the purpose of it? What was the legacy that you left behind? And wouldn't it be great for you to kind of take a moment and reflect and say, well, let me tell you about this community. You know, we went into this community there, and it was a real proud people that had been living there for generations. And they were really, salt of the earth people. They lived there, but they were going through tough times. There was no economic opportunities. There was sustenance farming. They were just squeaking by. And there was really no infrastructure, no support, but they had an endowment. They had a mineral endowment that was there, and they didn't know what to do with it. So you know what? We came in, and part of a long journey that we had, we got to a place now where that community, if I go back there, it's thriving. People have a great life there. There's a flourishing ecosystem there. There's long-term opportunities. It's a place that people want to move to as opposed to moving away from. People have a meaningful existence there. And every time I go back there, I have such a sense of pride. And I think my legacy at my dying days will be what we did for that community there. Now that's something that we want to be proud of. That's meaningful for us. That's our legacy here beyond all the things that we need to do as mining companies here. But how do we be a catalyst? How do we be able to look at those kind of communities in the world and say the difference was mining? If I look at that history of that community, when mining happened, everything turned for the better. And yes, we can point to pockets of that, but there's probably not a lot of locations or communities in the world where we can wholeheartedly put our hand on our heart and say, yes, mining has had that kind of long-term positive impact there. So I challenge us today. The world needs mining, and we're really good at talking about how mining provides the building blocks of society. I explain to my kids that we're the Lego blocks of modern civilization. The world needs more from mining, and it actually needs mining to uplift these communities. And certainly not suggesting that mining is the be-all, end-all, but mining needs to be the catalyst that brings the resources, brings the expertise, brings the context to the table so that communities can have that long-term conversation about where they want to go, what they want to be. And for us, I think the industry is moving on this. So the next generation of CSR, I think we've done a really good job at articulating this. The transformation that's happened in safety culture over the last 25 years, where we used to be okay if a few people died at a mine once in a while because that was just the way mining was done, or mining was the safety person's job. That culture is gone now in mining. We're very proud to say, and I think rightfully so, that mining starts at the top and every person in an organization has an ownership of mining. I think when it comes to community, sustainability, environment, we're saying all the right things. I think many of us believe it, but how are we organizing our companies to actually take advantage of that? And that's where I think the next phase of sustainability would be making it central to your strategy. Sustainability is not something the CEO gives a speech about, and when a community group has follow-up questions or an NGO wants to come in and say, I'm going to go talk to my investors, I'm going to go talk to my operations guy, my head of CSR is here, speak to them. Because they see it as secondary to their strategy. Sustainability becomes central to a strategy of a mining company. But to do what society expects us to do from mining, to do around sustainability, around the environment, around treating people with respect, treating the environment with respect, we've made huge progress there. But to do what the world needs us to do, we still need a change, a step change in how we mine. Yeah. And that's where the innovation piece comes in. The innovation imperative up to this point has been economic, financial, operational, safety, productivity. But I challenge that I think the next wave of innovation coming through the industry is going to be around social purpose, is going to be around the environment, is going to be around making life better for the communities around us. So I think as we challenge ourselves today to think about innovation, the lens of innovation and the lens of sustainability are not two different lenses, they're continuously intersecting.
Okay, thanks. Andrew, as an industry, we recognize that we need to do things differently and to improve CSR. How do we promote that in the industry? What have we learned over the last decade? What has worked? What hasn't worked?
Yeah, so Trish, thank you very much, and again, thank you, and welcome again to everybody. I think we're actually sitting at a juncture in time where we have to actually stand up and be counted. As Culver has just said, we're making great advances technologically, but I think we have done a very wonderful job of talking to ourselves, but not talking to society. So what has gone well, Trish? We've done a great job. I think we've upped the game internally. I think we've got comfort amongst ourselves to talk about, well, mining can make a difference. We can build communities. We can help develop nations, and we do. Canada is a great example of that. So we do that very well. But we are facing a terrible, terrible perception issue. So let me just give you an example. Earlier this year, I was interviewed by the Guardian newspaper. Now, some might think that a high-risk activity, and yes, it was very controversial amongst our team to actually take that interview. And it was a very, very tough interview. It was a 27-year-old journalist who is a well-known activist. And we actually got along quite well because he sort of saw on my shelf, my bookshelf, ranging everything from sort of Naomi Klein all the way across to Winston Churchill. And we have to sort of keep that breadth in our minds. We have a very big tent, we're very progressive and also a very traditional industry that was simultaneously. But at the end of the interview, I said, well, come along to the PDAC convention. You'll enjoy it, you can come to our event with all the media. And he goes, nah, let's just face it, mining is not sexy. Right? It does not have any interest to people of my generation, whether to work in it or to invest in it. And I think we have to consider that there is a much younger generation that does not understand mining, yet is also very good at Minecraft.
Yeah.
Right? So it's about communication, it's about building those relationships, I think, as we go forward in a very respectful and responsible way to connect with society at large. And I call upon everybody in the room here to do that. We must be our own advocates with society.
Yeah. Thanks, that's great. Stefan, social license and license to operate were buzzwords for the resource sector for many years. But over the last couple of years, the terminology has shifted away from license to terms like consensus and partnership. What has this meant for Rio Tinto as a company, and how has it changed the way you do business, and how will it change the way you do business in the future?
So, Trish, thank you very much for inviting me to be here. It's a good pleasure for me to be here. For many years in Rio Tinto, our main tenet was we have to secure our license to operate. The big challenge we have around that it was narrowing our thinking about how we have to secure the way we operate. License often means meeting the regulation, filling the right paperwork, meet the right government body to get the right approval. But that let very small place to the real thing that matters for us is the dialogue with the community where we operate, to make sure we understand their needs. You know, it's like often it's like we focus too much on one side win and not both sides winning. How we can spend time, quality time, to understand what the community really needs from us to have a win-win situation. Often it's like we were talking about money or so on, but at the end of the day, it's more what will be our legacy when we'll operate a mine in certain area. And when we talk about operation, often we think it's like when we operate, but it's more than that. It's from the beginning, when we do the exploration, when we do the construction, when we operate the mine, when we close the mine, and what do we do after that. It's clear in Rio Tinto that we have to spend more time at every level of the organization, not like just the CSR function, but it's something that all leaders have to take care of it, how we build trust with the community where we operate. In 2016, Rio Tinto make a statement of commitment around the indigenous community in Canada. That statement outlined our belief about partnering with communities that can bring better future for all of us, all based on mutual respect, trust, and benefit. Talking with the communities, we decided to focus on 4 things that was very important for both of us. The first one is education and training. The second one is the cultural preservation. Third one, economic development. And the other one is environmental stewardship. Let me give you some example, especially with our Darvik mine that we have in Northwest Territory. It's a diamond mine that started the operation in late 1990s. We have signed 5 agreements with the 5 indigenous community where we were operating. We have, with partnership, we have been working for them since that time, and it's not one agreement is done and we pass through it. It's like every year we review our commitment and if we are still happy with that commitment. We signed 2 socioeconomic agreements with the Northwest Territories where we involve the indigenous population too. We established an environment team that is with the community that monitor all our commitment around the environment. On that, we can see the results talk by themselves. If we look at our Darvik mine, 50% of our workforce come from the northern. 20% of that is coming from the indigenous community where we operate, right, meaning more than 200 people. We spend more than 75% of our spending is going to northern businesses. Of that 2.6 billion since the start of the mine went through indigenous businesses. We know that indigenous or especially community, but indigenous community are a view on long-term development, mainly on environment. We make that commitment with our Darvik mine to invest in a wind farm, one of the northmost wind farm in the world. That's great. That wind farm have helped us to save 18 million liters of diesel, reducing our GHG emission by more than 50,000 tons of GHG.
That's fantastic. Stefan, I'm just going to ask another question of some of the other panelists for a moment. Doug, a big part of what you work on is new technology and automation and underground mining equipment. You've also done a lot of work on tailings and management facilities. You know, and you've identified several technologies that can change the CSR profile of our industry. And I was wondering if you could talk a little bit about the work that you do on mining and new technologies.
Sure. The technologies we're working on for underground mines are all to improve the productivity of the operation. Safety has always been a big focus in Canada, and it still is, and it will continue to be. But productivity is the crucial issue. And when it comes to social responsibility, in mining communities, that means creating communities that participate in the mine, even though they're not employees of the mine itself. They're participants in the service and supply industries and companies that supply the mines. So supply the mines with technology and supplies, etc. And that's one way to enhance the social responsibility of that local community by building up their economy and helping them to participate in a broader industrial economy. For me, the social responsibility issue takes us back to the tailings piece, and obviously that's protection for the environment, and that's very clear to everybody. The third piece that we tend to miss, however, and it's the third social group in corporate social responsibility, is that more than half of the population of the world lives in urban centers. They're dependent on industrial and post-industrial economies. That means the supply of metals. Nothing we have here exists without the mining industry. So I do disagree with our colleague here that mining is the be-all and end-all of all of this. Without it, if we fail to do this well, then everything we have today crumbles. So improving productivity and the output of mines, when we look at, we have to have steel, loss of our younger population. Yes, we've done a bad job of communicating to the younger population. Many of them believe we can now continue to mine, have everything we have without coal mines. No, you can't. Even if we never burn another ton of coal for power, we have to have coking coal for steel. So you have to have coal mines. So that has to happen. We've done an extraordinarily bad job as an industry of telling urban populations why it is our industry is crucial to their existence. And we need to do a far, far better job. Yes, we're doing a far better job now of supporting rural communities in places where the mines are, but let's not forget that if we, and it may well be that you think at the end of your busy day in the city, wouldn't it be nice to be in a rural community somewhere? Yes, if you want a hard day, consider subsistence farming. That's not a fun day. It may look idyllic to you at the end of your day, but it isn't. It really isn't. So let's not forget what this industry is about. It's about building the society that we want to have for everybody in the future. We're doing a far better job of supporting communities in rural communities where the mines exist and the environment where those mines exist. And all of those activities have to progress. But we cannot do that at the expense of the productivity and profitability of our mining operations. And so what my little organization tries to do is to push that agenda forward as well as the other two.
That's great. Thank you. George, you help companies think about the future and the need to be able to pivot and adapt to change, and also on improving designs for sorry, got that wrong. What can the mining industry learn from the experience from other industries? Because you do a lot of work across industries. What about like upstarts from other industries like Uber, Netflix, Amazon? Would you ever think that the mining company of the future possibly doesn't even own mines?
Well, that's absolutely a possibility. So thank you again for the invitation. Thank you everyone for having me. You know, it's funny, a little bit of what I'll talk on, and I'll try not to spend all day doing it, it's sort of been touched on by everyone here. It's very hard to argue with anything, I think, on the fundamental level that anyone has said right now in 2017. I think you touched on how important it is to build a sustainable relationship with the communities as a whole. You touched on the fact that we need mines and metals. You touched on the fact that mining isn't sexy. And I think mining has relied on that fundamental belief for well over a century, for all time, right? We need metals, we need these commodities. Mining provides jobs. There is no replacement for mining. The government relies on mining. And I think the challenge is that the mining equation and society as a whole is changing in such a way that the fundamental belief of what we think is going to be required may change, and that could absolutely rock the stability that mining has relied on in order to survive. So, and I'll try and give the brief version of this, right? Before there's this sort of cost-benefit equation, right? Mining provides jobs, mining provides income, whole governments rely on mining, therefore the public relies on mining, therefore the politicians support mining, so one way or another we're going to support the mining companies. And as long as the value is in there from a financial point of view, we're cool with it. But now the difference is that a lot of the environmental issues are coming up. We have a change in our society, a change in what politicians and governments are willing to accept as the value equation. That equation is changing. And with enough disasters left and right, and it doesn't matter whether we're talking nuclear, or we're talking Samarco, or we're talking tailings, or whatever the case may be, you're seeing a kind of pushback from society that money isn't enough. Then on the we've relied on it, right? We've relied, governments have supported it, politicians have supported it because the money's enough. Then you've got the commodity side of the equation, right? And you say, well, we need metals. We absolutely need it. It's true, but we don't necessarily need it from the mining companies we have today and the way that we mine today. There are alternatives. And I'm not just talking asteroids, I'm not just talking underwater. It's all very cool, and we can all kind of look at it and think about it and imagine that it'll never happen until it does. But I'm also talking about recycling. And people that are doing things to replace mining. So you say we need the metal for the car, we need the coal for the steel, but we don't necessarily need the steel for the automotives. We don't necessarily need the steel, period. There are alternatives. And there will be even better and better alternatives as time goes on. So that's the jobs equation of it. That's the financial equation of it. This is the sustainability equation of it. This is the demand equation of it. Well, now we're all trying to move to automation and robotics. It's going to replace, in theory, everyone in this room, not to mention the vast majority of people that work in mining with robots. So now we're not providing jobs. There's a balance of the societal side of it in terms of environment. We may not need as many metals, and the metals we need we can get from somewhere else. So what is that foundation that we've come to rely on as mining companies has changed. And the last thing is the capital markets. Because the cycle's always gone up, but it's come down, but it's gone up, and the capital markets have been willing to throw money at mining companies. So that's kept them funded as well. Except mining isn't sexy. And if someone like, just to throw out a crazy example, if someone like Apple, who said that, hey, we want 100% of our metals to come from mining one day means they haven't figured out how, but let's say you throw something out like that, and that's enough of a challenge for someone, maybe them or someone else, to go out and say, well, figure out how to do it. Well, if you can supply those metals from recycling to Apple, you can supply it to Samsung, you can supply it to anyone, really. If you do it well enough, you can do all of technology. Well, heck, if you do it at that scale, you can do it for everybody. Maybe Apple could be a mining company. Why not? Let's face it, the capital markets like them better than they like mining companies. They're not constrained by the operating model that mining companies have. They don't have the legacy that mining companies have from a sustainability point of view. They're not going to have the jobs issue. It could be a real potential threat because they're playing by a different set of rules. Different set of rules with the capital markets, different set of rules in how they operate, different set of rules in terms of their operating platform. And if you look at a lot of the technology companies, Uber's, Amazon of the world, and so forth, they don't even have to make money. Not for now, at least. You just throw money at them as long as they grow. Different set of rules altogether. And it makes it difficult to compete if you're a mining company. How do you compete against someone who's playing against a different set of rules than you are?
Yeah. Thanks. Very interesting. Lisa, the mining industry talks a lot about doing things differently, and yet for the most part it's not including half the population. It needs diversity, not just more women, but younger people with their new technology. Would you like to comment on that?
Absolutely, and thank you to everyone for including me in this panel. I'm quite frustrated by the sort of lack of progress that we're making when it comes to diversity in this industry. It actually happens that I believe the third annual report just came out of the Canadian Securities Administrators on the requirement for TSX companies to disclose their diversity policies and their compliance with those policies. And the mining company again, the mining industry again has come in sort of at the bottom of the pack. In fact, I believe the mining industry has the least number of companies as a percentage of those that reported that have at least one woman on their boards, and it actually decreased in terms of how well they're doing from last year to the current year, going down from I think 13% participation by women to 9%. So, you know, we're really not doing very well, and I think, and George and I spoke about this a little bit before the panel, that it's quite clear that innovation requires diversity. And there's been lots of studies and you know, there's lots of metrics out there showing that when you've got a more diverse leadership group, that you're going to perform better financially. And I think, you know, a lot of the sort of, you know, courage to make some of the changes that are being discussed here will only come when you've got a broader group of people in a leadership position.
Mm-hmm. For sure. Well, I'm going to open it up so you can riff off each other, and we can take questions from the audience.
Yeah, sure, I'll come back on the sexiness. One of the problems that we have is we are actually a sexy industry. We just pretend we're not, and we need to stop doing that.
Depends on your definition of sexiness, maybe.
But the stuff we do is really, really interesting. It's not, we're not hacking rock out of the ground with picks any longer. This is a very sophisticated business. And innovation will actually bring diversity as we move to more and more automation, and the jobs in the mines will be to look after that equipment. We will not eliminate people working underground. No piece of equipment that you have ever seen does not break down. It will break down and somebody has to go to fix it. Unless you have a chain of other machines that are going to fix the machine that broke down and fix the machine that broke down and fix all the way back, that's not going to happen. It's far easier to go and fix machines with people who really know how to do that. Especially machines that have a lot of native intelligence and very nimble fingers. Those two things are very difficult for computers to compete against. They do brute force work, repetitive brute force work very, very well, but they don't do intelligent, nimble things very well. That's what we're for. So we will always have the upper hand if we want to run our business that way. As we do that, as we bring in more innovation, it will bring more diversity. Nearly a quarter of the companies that we support as innovators from our little center are actually run by women because they want to do something different. They don't want to participate in the way that the business has been done until now. Now, when you look at the total number of women in mining as a whole, there's no mine that has a quarter of their workforce that is female. Not even close. So the innovative space is far, far more diverse already than the existing space. But that innovative space is the future. That's where our industry is headed. So I don't believe at all that we're actually stymied here. We just have to recognize the trends that are taking place and capitalize on them and accelerate it. We actually have the bellwether metal for the industrial economy is copper. All of the major copper producers are trying to produce underground copper. They all have a date at which the majority of their copper comes from underground sources rather than surface sources. They're trying to develop and operate mines at 150 tons per day, or 200,000 tons per day. 150,000 tons per day, not a gold mine at 3,000 to 5,000 tons a day. Underground copper mines at 150,000 tons per day. That is a non-trivial engineering feat.
But Doug,
and they're not being successful.
But Doug,
and there is no app for that.
Right, but fundamentally, right? I mean, so no one, I'm with you, totally, makes total sense. But fundamentally, as an industry, we're even having a hard time hiring 50% of the world's population and bringing them in. Let alone getting a mind shift where we're thinking that, you know, mining is about robots and leaching and it's cool and let's hire a bunch of coders and let's make it like Google. Fundamentally, if we can't even do something as basic as bring women on boards, and let's face it, you don't have to be a mining industry expert to be on a board, right? You bring a little digital over here from somewhere, you bring a little financial over there, that's the whole point of boards. Can't even do that. How are we ever going to get to the point where innovation escapes fancy rooms like this and people that think about it all day? I mean, there's a mind shift problem.
Yeah, Lisa used the word I think of the day, which is courage. You know, we have an industry that are facing these headwinds on all levels. We you know, and many reports and analysts talk about all the headwinds we face from the technological, the environmental, the social, the environment. And so the imperative is in front of us. But most of the courage we have is reserved for financial engineering, around the M&As, around doing the deals, around buying that mine. And that's where the stories are swapped at PDAC. Nobody goes out there and shows the courage around how I hired an all-female management team, or I brought diversity on board, or I blew through the bureaucracy to push through that major innovation project that fundamentally changes some core processes that pissed off everybody over the age of 45 in my workforce, right? So I think the courage piece is where do we find the imperative to do that? And that comes back to leadership. And it comes back to leadership in all of these fronts here, is that our industry is changing around us, whether we care to admit to it or not. I think it's changing faster than we care to admit to or not. The barbarians are at the gate. Apple had a musing of a recycling in their Sustainability Act saying we want to move to it. They come up with a technology that strips all the metals out of a phone in like 7 minutes. Put the phone there, all the metals are stripped up to be reused. So they're just musing with this right now. Elon Musk is investing in lithium mining technologies all over the place. So we need to start thinking about this differently, and to do that, it's not a room full of miners talking to themselves. It's about bringing as many perspectives as possible, and diversity in faces isn't enough. If I stand here and I look like somebody different, but I say the same things as everybody else, that's not going to change the conversation. It's inclusion of opinions that's actually more important.
But fun.
So good.
I just, you said that the courage that you see is on the financing side, and I find even there being at the head of a business that's still relatively new, but doing these structured flow-through financing transactions where a lot of money is going into charities all the time, which ties into CSR, because I think philanthropy is part of community engagement. But I see time and time again, and it's particularly with the venture issues, the exploration companies that have service providers on the financial side that don't really give them a lot of, they don't give them the full picture in terms of the options they have. And if you can adopt a financing method that's actually better for you economically and at the same time can improve your image on the CSR agenda, even in a place like that, I'm not seeing the kind of like people standing up and saying, this is how I want to do it. Now, maybe some of that is awareness. But the other point I wanted to make quickly, though, that I find very frustrating is that all this reporting that's done in terms of the inclusion of women on boards and in senior executive positions by the Canadian Securities Administrators is only applicable to TSX companies, to the senior companies. And I hear great stories from companies that are senior, like Rio Tinto, where they really are making strides and really sort of putting their money where their mouth is. But most of our companies that are doing exploration and development in this country are on the venture exchange, and the regulators have chosen, I guess seemingly because it's too burdensome to have them engage in this conversation. I don't think it's very difficult or costly at all to just explain in your disclosure whether you've got policies on these and whether you're complying with them. Yet, somehow there seems to, I guess, been an effective lobby on this front, and it's, so it's not happening at a grassroots level.
Yeah, Lisa, I sometimes give lectures at universities, and one of the things I often say when we're talking about ethics is that the law and the reporting is the minimum standard you have to achieve. So people can go above that anytime you like, right? You can sort of always, we don't need to have regulations to be able to report that. We should be wanting to do it. And I think one of the most exciting things that has happened in Canada was actually having a cabinet that was 50-50, and to have a Prime Minister that had the courage to stand up and say, because it is 2015, we're doing this. I think, coming back to some of the themes I was making earlier, and back to yours as well, George, is that we have to seize the moment. We have to sort of go above and beyond and take leadership and to take action in terms of our industry becoming more gender-friendly, attracting youth. Our society, one of the reasons that Apple is not wanting to have mined metals in their iPhones is because they cannot control the supply chain. The consumers are writing to them, and incidentally one of those is my daughter, who says, like, why do I have slave-found or slave-mined metal in my iPhone. It's just not right. Network cannot control this.
And when we talk about innovation, we have always in mind, often in mind, that technology. For me, innovation is not just about technology. It's about how do we manage our workforce? How are we innovating to manage them differently? How do we manage our partner? How do we speed up the speed of improvement? It's more about not just innovation about technology. It's about all the aspect of managing business.
I think one of the things, and just to touch on for a second, is at a fundamental level, people, for the most part, react in a way that rewards them. So whether it's at a manager level or a CEO level, you're incented to do certain behaviors, and you follow those behaviors. And then every once in a while, someone crazy shows up. It's why we like to talk about Musk. It's why we like to talk about Steve Jobs, because they do something that just seems like it goes against the normal route of what should reward you, and boom. And we talk about them all the time, and we still do even when they're gone. But fundamentally, and I mean, we've all lived through waves of innovation. Some of us have been directly impacted with clients and funding. Others have been on the management side within mining companies. But we've done these innovation projects, or we've tried to make changes, and then the down cycle comes and they all get killed. I had a head of strategy and innovation for one of the major mining companies. I had a conversation with him 2-3 weeks ago, where he basically said he wanted to start up an innovation program, and I asked him, did he know that we already did this one 6 years ago, but it got killed because of the down cycle, and he had no idea. This is pretty typical. CEOs have to report quarterly, yearly results to Wall Street on projects that are measured in decades, sometimes a century. I mean, you know, how do you think in a 40-year period when you've got to make your numbers in 6 months? And how does any executive, this is not a negative comment, how does any executive try to make their yearly numbers and yet spend money that's going to help them in 10 years at the same time? You don't, because you're not incented to do so. So until Wall Street and executives and companies have an understanding or we reject Wall Street's point of view and just say, screw it, we're going to do what we're going to do, and invest or don't invest in us, we're ready to survive without you for 10 years. Unless something like that happens, fundamentally, it's very difficult to make change. We need to incent the behaviors that we want to see in companies. Otherwise, executives will do what they're paid to do.
And I would say I agree with you, and we have seen that in Rio Tinto too a lot.
Sure.
Is why now we try to focus on quick innovation, small and quick innovation that can be implemented within a year or two. We know if that takes more time than that, it's like you just restart again. So how we change the way we innovate to speed up that process that is within the time frame that everybody will.
And that's fantastic. And fundamentally, that works as long as everybody else is moving along, incrementally improving what we do today. But if you want to reinvent, which Rio Tinto, let's face it, threw their cards down and said, we are going to try something bold, right? If you want to reinvent, you need time and permission to do that. And even they had to come up against the realities of the market at one point.
Eventually they faltered. And there are two drivers in the global economy. Number one is the growth in population. So if you think you're going to do well by using replacement metals, you're not. We're at 8 billion people already. We're well on the track to 9 billion, all of whom want stuff. And an urban lifestyle needs far, far more metal than one in subsistence farming. They actually don't need mining for very much at all. Thank you very much. Urban lifestyles need more commodities than non-urban lifestyles, and the majority of the global population is already there and growing. And secondly, the second biggest driver is the speed at which people begin to elevate their expectations for standards of living. So it's not just a numbers game, it's also that the people who do live in urban centres want a higher standard of living. Even the people living in rural centres want a higher level of standard of living, and that means even more metals. We've mined a lot of the easy stuff already, so we have to be mining much more difficult to access metals of all types right across the whole spectrum of the economy. It's great to have your daughter saying she'd rather not have
Slave
metals in her telephone, but until she refuses to buy that telephone, it won't change.
Yeah, but that's a very good point there, Doug. So, you talk about these large urban centers. So people are making choices now, right? Like, if I have a choice to buy a product that is not got slave labor in it, it's a sound company, it's recycled material, I'm going to buy that rather than buying a new mined product if I cannot show that it is being done respectfully and without, should we say, that it meets societal norms, right? So your investors, they want to, increasingly investors are looking at responsible, ethical investing.
Absolutely. I mean, we're seeing, one thing that we have seen is a shift in a lot of the financings we do where some of the major producing companies are looking for their, adding to their resources through direct investment in exploration companies here. And, a number of them have publicly said that we, have a sort of scorecard in determining our responsible investment guidelines, and we're going to look at a lot of things that people weren't considering beforehand. But I do, just in response to a couple of the last remarks, I mean, I think short-termism is a huge problem in terms of how companies are managed, and really that that makes me think of another area of innovation in management, and that's executive compensation, because we are rewarding people based on those short-term goals, and until we get some more, creative and sort of courageous types of decisions being made around executive compensation, I think it's going to be pretty slow to make, to make strides in this area.
And that requires the value equation to change. Forget mining for a second. Just look at automotive. I mean, I can't imagine that we would have banned a combustion engine 30 years ago. Now, India says 2030. Whether it'll happen or not, let's ignore for a second. China says someday soon, but someday soon is enough because when China sneezes, we all catch a cold. California's been doing this for years. They say 2030. Even brave Oxford says 2020. But I think they did that because no one's paying any attention to Oxford anymore. But the point is, we're banning combustion engines. It's going to happen. Electric vehicles, going to happen. So now you've seen it in the automotive industry. It's going to fundamentally change what's going to impact the oil and gas. It's going to fundamentally change what's happening with combustion engines. I have chemical clients that don't need to make catalysts anymore, at least not this type. Same thing will eventually happen with mining. Let's just look to the automotive industry and see what happened and ask ourselves, what is our time horizon? How much room do we have to play, realistically? And then have it. And if we're ready and have the time, we might just be okay.
So this is, I think there's an insight coming from that, George, in the sense that no auto manufacturer could have predicted the exact moment of this disruption, or the exact nature of that disruption. They knew it was coming, but in what way and what we was going to plan out. And I think the same thing is for mining, and that's the same thing for industry. I have friends in the, down the street, Bay Street, in finance, and our entire banking sector is being redefined as we speak right now. And when we talk about innovation, the risk of innovation being done in incremental amounts without any kind of portfolio approach that takes into account time horizons, but also avenues of innovation and partners of innovation, you eliminate the portfolio. And what you end up doing is trying to pick winners and losers, and very few people have ever been successful about trying to successfully predict the future. And so the innovation spaces that we see other industries that do really good at this is they take off the covers, and there's a portfolio there. They're partnering with research companies, they're partnering with other, they have JVs, they have startups, they have entrepreneurs, they have all that going. They have short, medium, long-term funding for projects, and they have them across every avenue of innovation across their operations and their people and their offices, and they do that, and they fund it through all of the cycles, because the funding for that is different than operational funding. It's different than capital funding, and that funding is held sacred because people understand that that's where the next company is being invented right now. And that kind of leadership, again, is where mining is lacking because of the heydays, and we've all seen the bad days, is that innovation becomes, what can you do for me in the next 12 to 18 months? Yeah. And that, in an ecosystem as broken as ours, where innovation has not been funded and cultivated for generations in that way, it's a really hard ask for us.
I guess I should just pause for a moment and ask a few of the questions that the audience has posed, if I could. The first one is, what is needed to make the partnership model work in remote areas? And I know Stefan is an expert on that, so if you'd like to add.
I think that to make the partnership model work, the first thing is like We have to be close to the community. We have to be close to our partner. We have to learn to listen. I think too often we arrive with one recipe that would fit all around the world. We have to take quality time to spend with the community where we operate to understand their real needs.
Yeah. Anyone else want to?
So I think,
please,
jump
go ahead.
on that. So again, I think it's very much about that relationship and being respectful. I think if we take, say, a large project, an Anglo-American or Rio Tinto projects that can have vast impacts, these projects go on for 40, 50 years. The one thing that is not moving is that mine and that community. There will probably be 4 or 5 different national governments, local governments, probably 5 or 6 different CEOs. That mine might even be owned by 2 or 3 different companies. That community is staying there. And we have to, I think, really work very hard in understanding of societal trust between that community and the industry writ large with so many moving parts.
Definitely.
I remember I visited one of our mines for one of the companies I worked for, and I was the first guy there from our company. We just bought this mine, and we're meeting with the elders in the community. The elders walked up unrolling pieces of paper that had agreements and partnerships, things that had been committed to them by the first prospectors that showed up on that site decades ago. And they saw us, and they didn't see that it had gone through different ownership structures, different names, and all brands, all those things there. They saw that these were the people that, you're the miners that were here at the beginning, and these things were being promised to us decades ago. So great, you're here to honor these promises, and we had no capacity to even know what was promised at the time and what to do with it. So this timeline, this sense of starting early and expecting to be there for the long run, I think has to be at it. And then you mentioned listening. I think it has to come from a point of respect. If we're going to go in there with the same colonial attitudes that we've been using for the last 50, 75 years, 100 years in many parts of the world, where things are done to communities, we're going to keep having the same problems that we do, where how much of a mismatching of expectations and alignment is there that a community feels their only option is to blockade and shut down a mine? What has gone broken there that what they feel needs to be done, as opposed to every day that the mine is open, our boys and girls are working there, our suppliers are being bought from, and taxes are being paid, we're getting benefits from them, saying, no, that's not going to work for us, we have to shut this place down, because that's the only option we have. So there's something broken in that relationship in many of these places.
For sure. Here's another one. Please elaborate on 1 or 2 partnership model examples and what is required for it and what potential it has to drive incremental innovation. Anyone?
I'll start with the quick one, and then you right in there. So we've done these open innovation forums for many of the big mining companies in the world, where we bring together on a particular topic. We bring together some of the key operators within the organization as a third of the people. A third of the people are existing suppliers who have deep expertise in R&D and are doing different things. And then we bring a third of people who have never touched that problem before, or completely outside the industry. And over a 2-3 day period, what we do is we tackle that problem in a totally different way and come up with completely independent, outside-in ways of looking at that problem that people from the inside would have never looked at it that way. Out of that insights, out of those thousands of ideas that get generated, we take the ones that have the most energy, and we actually create new consortiums that are made up of the mining company with the existing suppliers and these new folks coming in from different spaces there. And we try to engineer, we take them through a process of quick learning to try to get to some kind of minimal viable concept to make it happen there. Right. I use that as an example that there are many, we didn't invent that model at Clear. That model exists in other places there. Many other industries have been doing this for a very long time, and I think mining's just getting, this is the benefit of being a laggard, is that you can look other places and take inspiration or basically copycat what they're doing. Right?
Anyone else?
Right, no, similar sort of thinking. We built some of the largest open innovation consortia for some of the mining industries. And again, very similar sort of process to tackle these problems. But I think just to answer the second part of the question is what is required to drive it for incremental innovation? And what is required, I think, is one, you've got to have a very clear vision and understanding of where value is going to come from in the future. You've got to have some sort of vision of where this is all going, and you've got to have some sort of then strategy to achieve it. And what that means is you've got to have the funding and the permission and the thinking to say, we're going to do open innovation, brilliant, fine, around specific problems, great, but then we're going to take that open innovation and we're going to very quickly move to attempting to implement it, to attempting to create solutions that we can use now. And to do that, you've got to have One, ideas that'll work today, but two, an understanding that these ideas are going to lead to something in 3, 5, and 10 years. And what a lot of companies do is even if they get the first part right, they figure out what the problem is, hackathons are popular for this sort of thing. It's a cool thing to do. Don't know if they work, but they're cool. They figure out the first part and they say, okay, what's on the shelf that we can do? And they go ahead and they start implementing without understanding how that's going to make you a autonomous, safer, more continuous mine in the future. And that's because the time horizon's off a little bit. And again, we're beating up on mining companies, we're beating up on mining, we're beating up on miners. This isn't because we're not all trying to do this. It's just because from the point of view of incentives and strategy and how people are what people are being asked to do, there's a misalignment between changing for the future. It's not that miners are bad. They want to do bad things and they don't want to innovate. My opinion, working across most of the industry, is that miners and people working in mining companies are fundamentally good people. And they want to do the right thing and they want to change.
We're very passionate.
Very passionate. It's all about lining things up properly.
So since we actually do the innovation, and we start off with some of these ideas, some of which come from open innovation or not, the fact is, when you want to try and push it through all the spectrum of things you have to do, then you have to have investment. And investments want to attach themselves to assets. And that asset sometimes is just knowledge. So if you don't have the IP or a way to protect the IP, you can't have it open, because where does any one investor get a benefit if it's open to everybody? So it has to narrow down, and it narrows down very, very fast. And a lot of the people who are involved at the early stages of open innovation disappear really fast too. It's like any aspect of your life. Anything you wanted to do, and you start a committee of 10, I guarantee you, by the end of the process, there'll be you and one other person doing the job. That's the best you can hope for. If it doesn't actually peak
I want to add,
completely.
with innovation too, in my mind, come acceptance of failure. What
Yes,
we see in
you
major
can.
company, we don't accept to fail. So people, when they try to do innovation, they try to be perfect instead to test something very quickly and fail.
Yeah.
So as in terms of leader, we have to change our mindset. How do we accept people failing to force them to try more and more and more, quicker and quicker?
And this isn't a mining only problem. Working across many industries, what it takes to run a well-run mining company is management. You're proven, you're using proven technologies, you're doing things that you know work, it's consistent, it's safe, it delivers returns. What it takes to grow is not doing things right, it's screwing things up. I mean, that's not what you shoot for, right? But you screw things up, you're going to fail. It's learning from it, it's trying things, it's risking things, it's trying many things. It's the opposite of proven, the opposite of reliable, and the opposite of consistent. Doing both things in the same company at the same time is a challenge and has nothing to do with mining.
That's right.
Chemicals, financial services, it's why traditionally successful companies have such a hard time pivoting. And if you can figure out how to do that, well...
And that's the problem with incremental. Incremental, every day, every mine gets deeper, hotter, harder to run, more expensive to run. Incremental innovation, basically, you could call that increase in cost operational inflation. Incremental improvements in your operation are basically just keeping your head above that water. That's not going to take you anywhere new. It's just going to keep you alive in the trench you're in today.
And then that shows up.
Somebody's not shooting your head off. But if you want to have it, it has to be step change. You have to have a significant improvement in performance, because that's the only thing that can justify the investment in making that innovation actually happen.
Yeah.
It's an investment game. It's not a technological game. And the biggest thing is actually mindset. You're right. It's not appropriate to blame existing mining companies for not doing this, because running even a small 3,000 to 5,000 tons a day mine is a huge effort. You know, it's an absolute.
The deck is actually stacked against mining companies.
Yes,
if you think of
completely.
building a mine, by the time a mine gets announced to be built, it's already over budget, it's already behind schedule. So you're there going to the EPCMs and saying, build this thing yesterday and just take whatever it was and make it 5% faster, more efficient, bigger. Good, we got to get going because we're already late. I'm already getting, the market's already holding my feet to the fire. And then you go into production and same thing happens again. It's Q4, guys, got to head grade for, take the best from next year, bring it in this year because we've got to meet our budget, meet our costs, and do all that. And you're just trying to keep your head above the water. But in that, oh, by the way, we have this new piece of equipment sitting over here. Can you try it out? And if it doesn't work, I'm still going to hold your feet to the fire on the production and the cost side. And if it works well, you might get something out of it. So why would anybody want to innovate at a site?
It's not mining that's in trouble. And I'm sorry, and I think you probably let end on time.
Yeah, we actually are out of time, but just finish the thought, please.
I was saying, it's not mining that's in trouble. Mining will survive. Now, whether it'll survive with Rio Tinto and Vale and Anglo American and Barrick as they stand today is a different question. But one way or another, we're going to get what we need. It's not mining the future of mining that's at stake. What we're talking about here is the future of the mining industry as we know it. And that's an open question.
That's exactly the right note to end on. Thank you. Thank you so much, everyone, for coming, and it's been very informative. Thank you.
Where should corporate responsibility rank in the list of priorities for CEOs in the mining industry? 46% of our respondents said second, 29% said first, 16% said third. So that's pretty impressive, right? That's 75% in the top two. So that speaks to the important role that CSR is playing and is going to continue to play going forward. So that's right on point. Thank you. I mean, that was exactly what we were hoping for. That was the kind of real conversation that we wanted to get going. You never really know. We do our best. And we were very careful in selecting who we wanted to be on our roundtables, and we're off to a fantastic start because that was excellent. Hopefully everyone got as much out of that as I did. We do have, for hungry people here, we do have a bit of a healthy smart break going on in the foyer. So keep that in mind. You can grab a little bit of nosh. And we're going to keep things rolling here. It'll take a minute or two to set up our microphones for Leslie Stokes. Our next panel is going to be on big data. It's a big topic these days, and how it affects exploration and how it's going to help us make our next find. So come back in 5 minutes and we'll get her going.